Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning. And I think Monday has been an absolutely amazing day. U.S. markets have responded, in a similar kind of way that we did yesterday, or even better. So lots to talk about, lots to discuss. Overnight news flow as well. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning, folks. Yesterday was a spectacular blockbuster, right? But this morning, I think the question is whether Asia, had much of the hurrah just yesterday, or whether there's any follow-through action. And I think right now we're getting slightly mixed signals, but yeah, big moves in the US overnight, Nigel.
Well, since the globe is a better place, and I just wanted to focus on the climate today. It looks like it's going to be a bit of a rainy day here in Mumbai. Dark clouds up above. It's been a while. It's the month of May. Looks like the rains are going to be here early.
By the way, the IMD is saying that the rains are going to hit Kerala, the coast of Kerala. 1st of June is the date.
27th, right? I think
27th of May. So it's
27th
early.
of May.
So plus minus 4 days. So
for all the Mumbai mayhem during the monsoons, I must put on record, that's the season I love. Really looking forward to the Mumbai monsoon.
And the normal monsoon is something the market looks forward to, besides Surabhi looking forward to. So that's good news, another tailwind for us. But let's get straight to the action, Prashant.
Absolutely. Let's just quickly take it from the top and tell you what you need to know as we begin this new session. So US-China tariff reductions are a game changer. At least from a tactical point of view, it is a game changer. There is no two ways. There is no question about it. I'll get to what markets did, but I'll tell you how much the view has to be changed, right? I mean, everything that equity analysts and economists, etc., have written for the last since the 2nd of April, I mean, they got to write it again with different assumptions. So it's a flux, but in a positive way for once, at least this year. So Goldman Sachs is making 3 changes. They're saying growth forecast for the US is back to 1%. For that is 2025. Recession risk, they're cutting down to 35%. And rate cuts, they're pushed out to December. Obviously because they don't expect a very sharp deterioration as far as US growth is concerned. And this is what I'm saying. This is just one house, and we'll get you more as we go along. Equities last night zoomed. S&P was up 3%. The Nasdaq was up 4%. The Russell was up 3.5%. I mean, we saw a 3% plus move on the Nifty yesterday as well. So these are perfectly in line with what we saw here. The S&P 500 broke above its 100-day moving average. It's also above its 200-day moving average. Now, it's reclaimed 200-day moving average for the first time since March. Wix fell a sharp, I think, 16% or so. It's back under 20, closer to about 18.25. The 10-year yield, it's risk on. I mean, yields went up 9 basis points, 4.5% nearly. The dollar, actually, if there is one thing, there are 2 things which feel out of sync with this changed environment. One is the US dollar. So you've got to ask the question whether the dollar has got broad upside from here, because people have been short dollar in a big way. The dollar index last night was up. And the other thing which is just kind of felt out of sync, even before the announcement of the US-China, cooling it, has been equities were bouncing in any case, and oil fell out of sync, falling to 60, etc. So oil yesterday was up about 2% or so, $65 or so on oil prices. Now, in terms of Trump, he focused on he spoke about the pharmaceutical price fairness. There was a press conference. We'll probably play sound bites from that. The EU, European Union, was criticized the most. Remember, pharma has been the focus here as well. Even with a 3% gain on the Nifty, there was the pharma index which was down. And, some of the stocks, of course, were down in a pronounced way. Geopolitical headlines: Trump is going to be traveling for 3 days, 13th to the 16th, to Saudi Arabia, Qatar, United Arab Emirates, the UAE. And I think this is essentially a trip to lock in some of the investments these countries have promised to make onshore in the US. We'll put out the data with Nigel in terms of how much short covering, etc. we saw. But my sense is a lot of what we saw, at least in the first half, was short covering. But that does not mean that real cash buying can't lead to overshoots from here on the way up. So be mindful of that. Nifty closed yesterday above the previous high. The psychological resistance immediately up next is 25,000, around 25,000 number. And after that, I mean, the 78.6%, 61.8 is gone, 66 is gone. I mean, you will stretch it, 25,310 is the 78.6% retracement of the entire decline the Nifty has fallen, has seen. And support comes in at the 20-day moving average. It's far away, but basically that's because we got a 4% pop yesterday. 24,027 is the 20-day moving average for the Nifty as of yesterday's close. Nifty Bank, it can retest the recent high, I mean, to begin with, 56,098 and then 56,450. And on the way down, the Bank Nifty support stands at the 20-day moving average, which is 54,269. So, GIFT Nifty, I think, is indicating a slightly lower start, a 100-point cut. And that perhaps is natural because we got a 4%, I mean, 3.5% pop on the benchmark index. So, in all fairness, it's perfectly reasonable to expect maybe a little bit of a drawdown. But I would still emphasize, just in terms of sheer the surprise, what has happened after the weekend and the announcement yesterday. I mean, tactically, I mean, it is risk on as far as many asset classes are concerned. So 24,921 on the GIFT Nifty. Surabhi.
Absolutely. By the way, speaking of Trump's trip to the Middle East, I don't know if you guys got that point. The latest conflict is what? Plane.
Plane, sorry.
It's the plane, it's not the car. $400 million, 747, Boeing 747. He's willing to take it as a gift from the Qataris. And there's a huge furor back in the US about the proprietary or the impropriety of such a gift. But anyway, that's Mr. Trump for you. Now let's talk about some of the other cues as well. So the good news, the great news actually, is that we had another night of, largely a night of calm across our borders. So no, untoward instances being reported. Yesterday, the DGMO level talks happened. Apparently, the Pakistani side tried to raise the Indus Water Treaty issue, but India kind of completely negated that and did not entertain any of those discussions at all. It was strictly a military conversation. The watch point from here on, when it comes to geopolitics and macros for us here in the subcontinent, I feel, is really going to be the Indo-US relationship and the posturing that the US has taken in the last 3-4 days on this entire conflict. We have some instances of that, and I'd very carefully watch out for the progress on the Indo-US trade deal from here on. And this morning, we had a fresh development. India has gone to the WTO, the World Trade Organization, and it has proposed retaliatory duties against US steel and aluminum tariffs. Remember the higher tariffs that the US had levied? So we've gone to the WTO to protest that. Now, is this a first? Are these just going to be diplomatic skirmishes or something more? What happens to the India-US trade deal? Let's see. Yesterday, obviously, we had more statements coming in from Donald Trump, and I'm just reading out the sheer gist of it. He's claiming that this is a US, stopped a nuclear conflict, and it would have otherwise been a bad nuclear war. And not just that, he's saying that I told both India and Pakistan that we can do a lot of trade with both the nations, but only if they stop the military action. So we need to see how the Indian side is going to respond to that. We heard the Prime Minister's address to the nation yesterday. Absolutely no mention of the US or any other, international player in this. And in fact, he said that we will not, give in to nuclear blackmail. So very strong statements. Watch the geopolitical space. But coming back to the other market cues, Asia this morning is actually looking quite good. The Hang Seng market is selling off a little bit. So while Japan is carrying on the good run that we had yesterday and this overnight strength on Wall Street, the mainland Chinese markets and the Hang Seng, they're taking it a little easy after yesterday's big rally. The yen, by the way, is a watch point. Remember the big move on the dollar yesterday? The yen had weakened to as low as 148.4, 148.5. So from those levels, is a bit of a relief pullback, some strength on the yen that's coming through. Now let's talk about our markets. What a blockbuster Monday we had. The highest percentage gain in the last 4 years since Feb 21. That's what we saw yesterday. It was a bazooka day. The Nifty is up almost 15% from the April low. That low was made on the 7th of April. And from that point onwards, it's been a stunning recovery, 14.6% to be more precise. And now we're just 5% away from the all-time high. So is taking the all-time high out a given? Let's see. We'll track this as we go. Flows, the FPIs are back to being buyers yesterday, but it is not a very big buy figure to tie in with what Prashant said. Yesterday, even domestic institutions were buyers, but you can see the numbers, 1,200 crores, 14 to 1,500 crores. It's not like we had 8,000 crores of buying coming through. So that's why the F&O market analysis will be very important, and we'll get to that in just a bit. A couple of stocks in focus today. There are a couple of block deals that Nimesh has been alerting us on. So watch out for Paytm Antfin could be selling some stake. There's KFin Tech, where General Atlantic Singapore, they could be looking at selling some stakes. So block action is back. And of course, we'll react to more numbers, fag end of the earnings season. Tata Steel's come in. Nigel's been telling us numbers are more or less in line. So we'll get more details in a bit. But largely watching out for a stable session, perhaps. Nigel.
Well, the Indian markets, we're running a big marathon. And yesterday's trading session, we had a 100-meter sprint. And we aced that. So I think maybe today, maybe for a couple of trading sessions, a bit of pause, getting your breath back may not be such a bad idea. And it seems that could be the case after the big, quick 100-meter sprint that we saw yesterday. Well, the close was very, very strong. And the last tick of the day was at the day's high. However, overnight cues, if you look at the Troika, that's the yields, the dollar index, as well as Brent crude prices, all of them a little bit higher. Brent crude prices more or less flattish overnight, but the other two as well did gain some strength. And the Troika, well, not really in favor of the Indian markets. We like, softer data coming out from all of them. Moving to the traded value yesterday, the NSE traded value was much higher than what we saw in Friday's trading session, which tells you in Friday's trading session, we saw profit taking actually on rather low volumes. But given the kind of volume that you saw yesterday, you would have liked to see an institutional net buy number that was more than 2,500, 2,600 crores. Then who drove up the markets yesterday? In all likelihood, it could be retail audience and large HNIs that were sitting on the sidelines. They came in there and they deployed the money, which explains why we saw very, very solid market breadth even in yesterday's trade. What about the index futures? Well, the FIs, they bought close to around 1,200 crores in the cash market. But on index futures, there was some mild short covering that we saw 7,000 contract, swing out there because 4,000 contracts were covered out on the short side and 3,000 contracts were added on the long side. On stock futures as well, there was short covering. Close to around 30,000 contracts did close out. And you had close to around 78,000 contracts that were added. So clearly, there was some short covering that did take place. What about the options data? Well, the FIs, they bought more puts than calls in yesterday's trading session. But the good news is they continue to write higher amount of puts in comparison to the number of calls. And that is the important data point. 1.5 lakh puts written yesterday. That compares with around 40,000 calls, which is telling you the base of the market is likely to have moved up a little bit. Because of the aggressive put writing that we've seen, the PCR has now jumped up to around 1.3. Normally at around 1.5, we do see the markets come in for some bit of profit taking, some kind of consolidation. So the PCR as well has jumped up a large deal. And pull up a couple of strikes. In yesterday's trade, 24,500 put, 24,600 put. Both of them, added close to around 1.3 crore shares between these two. And then it appears if the markets just take off, some out-of-the-money call buying is what we saw in yesterday's trade. All you lose is 30 rupees. So it appears a bit of a punt taking place out there. Which brings us to the levels. Since the GIFT Nifty suggesting a bit of a pullback, 150-point pullback to kickstart trade, well, I think, the crucial support zone needs to be maintained. This 24,550, 24,600. The markets are in an uptrend. It has moved to a buy on dips market. Some kind of near-term consolidation is what we could look at. But the band that was a bit of a resistance on the upside, that's going to be the crucial support and the near-term support. The Nifty Bank, the next leg of this uptick starts once the Nifty Bank can conquer that 56,000 mark. Because in the last month or so, we have visited this level numerous times, but we couldn't continue that. So that's why, in fact, that's the important mark, 56,000 on the Nifty Bank. If it can conquer that, then the next leg of the up move starts, both for the Nifty as well as the Nifty Bank. I'll keep an eye out on the broader markets as well, because yesterday the breadth of the market was spectacular. So some kind of cooling off, some kind of consolidation in the near term, par for the course for the Nifty.
Absolutely. Given that, steroids move that we've had 15% in just about a month, perhaps some sort of consolidation would be indeed par for the course. Let's get you the equity call of the morning. Chetan Chetha for Nomura says the US-China agreement on Monday, where tariffs were reduced, came as a significant surprise for markets and will likely support risk positivity in the near term. He says there is China equities to a tactical overweight. He adds that they're staying overweight on India, but trim the overweight to fund the China upgrade. For now, he says they're adding 1 percentage point overweight to China equities by reducing allocation to India equities by 1 percentage point. Very, very interesting. So is it advantage China? Just from a tactical point now, well, for Nomura, it seems to be.
Well, this is Venugopal Gare of Bernstein, who believes that markets are positioned well. He says macro picture will stay resilient with improved liquidity, lower rates, better government capex spends, rural demand, and support from tax cuts helping reduce earnings risks. He expects volatility to continue. Do not expect a linear increase in the Nifty, but he reiterates their end-of-the-year target at 26,500 and suggests bottom-up stock picking.